Intraday trading is the first trading approach we are going to cover, and without a doubt, it's the hardest one you can choose, but your reward is also going to be in a kind of a highest form. You will be taking a lot of trades, and if you will be able to execute them well, your account will, grow the fastest. So the characteristics of a day trading, basically, you are trading on a high frequency with a low risk profile. There is a no reason to risk a lot of money on each trade or large percentage of your account, because obviously you are taking a lot of trades. So if you risk 3 or 4% on each trade and you will get string of 5 losses, you are easily in 15-20% drawdowns. This doesn't really make sense, so you are sticking to really a lower risk profile, which is around 1 or 2%. You are working on 3 time frames, basically, daily, some intraday chart, which is 30-minute or H1, and then the execution time frames, which can be the 5-minute or non-time based rotations. Trading one market and doing the best possible job of understanding it is kind of your goal. You can focus on day trading more markets at once, but that's even more complicated. So if you are newer to this, just stick to one market and really try to go deep into it. The daily time frame is going to work for marking out the key daily levels based on price action and composite profile structure. When you have a daily bias, it is worth to give trades more room to capture bigger moves. If market is, even if you are day trading and market is hitting some sort of key level where it can run for a couple of days, you should be aware of that, and therefore you can be able to letting trades run for a bit. The intraday time frame, which is this 30-minute to 60-minute chart, serves purpose for marking out key levels for trading. These are 30-minute FTRs or clusters, QMs, and possible levels for failed swings. Per day value areas of daily and composite profiles, naked points of control, and per day and prior week highs and lows. Also market profile structures such as poor lows and poor highs. You are trading from one intraday level to another, basically. So if you take a trade from a 30-minute level, you want to be running a trade to the next 30-minute level. The execution chart will be then the chart where you will actually execute the trades. That's going to be the 5-minute or non-time based chart. I use tick charts, but sticking to 5-minute is completely fine. Executing trades on lower time frames, patterns in confluence with footprint and cumulative volume delta. The trading expectations, your trades should be working rather quickly. There is no reason to stay in trades for a long time if they just don't work out. Traders can always re-enter with further confluence with active trading approach. Besides trading at the levels, you can also trade into them if there's opportunity to do it. This is kind of a specific thing for a intraday traders, where basically you have let's say the level of kind of a double top, which for any kind of swing trader would be the level to watch for possible fading opportunity. But as a day traders, you are sitting in front of charts for a longer period of times and paying more attention. So if there is a opportunity to do it, that is completely fine to just take a long position and trade into the level. Obviously, the advantage of that is that if this level doesn't work as a failed swing and market will just blast through that, you got something out of it. You took a long into the level. Even if you will close the trade there, you are not kind of limited to this only one scenario, which would be shorting. Okay, so let me actually take you through kind of a preparation for intraday trading. I will be using Bitcoin chart on Sierra, but like I said at the beginning, you can use ExoCharts with TradingView as well. That's completely up to you. I just, will do this and won't have to switch between different kind of tabs. So first of all, I'm going to close this chart because this is not important. Anyway, starting off of a daily time frame. As you can see, I have a daily chart and I have a composite volume profile that is marking all the levels on the chart. So I want to go through this kind of a classic top-down analysis where I will mark out the key levels. The first key level I can see is here, which is the edge of this high volume node. I'm going to mark these levels in green color because this is the edge of the bottom edge of the area. Where I would put the line exactly, I would put it here, basically the last touch of this support level, because as you can see, it's not only edge of the composite profile, it's also a key SR. You know, you want to be you want to have these levels to go in confluence, like I said previously. The next level would be, you know, I will do more like relevant levels, the upper edge of the high volume node. This one is going to be in red color, and once again you can see that you had a support here, resistance, then you have a little bit of support, resistance, and support. So this high volume node is covered. If you want to also mark out a POC, that will go in a orange color, and I would put that in at high of this candle. You can see that this level is not that great. There is a market was basically just going back and forth at it. You know, here it didn't pose any sort of significance, but can act as a level if we are going to test it again. So I want to be aware of that. Looking below the market, there is this level right here. This is your daily cluster basically, and you can obviously kind of highlight the whole thing in a kind of a box, but I just like to put a line there because, you know, I don't want to have these different colors for backgrounds. I know if we are going to hit it, we are inside the daily cluster. This is the level for the upside I'm looking at. Besides that, I don't really see anything too important. One more kind of daily level which is interesting is basically this one, because as you can see, we had this level of SR which just got broken through and tested quickly from the opposite side. So if we are going to trade below it and show some sign of reclaims, then, you know, it's good for moving higher. Other than that, you know, obviously this kind of a composite profile is a little bit not so clean, because you can see you have this kind of a descending volume. So the only thing I will mark out here is this kind of a swing point at price, which is this low we made basically. After that, I am going to, this is H4 chart, you don't need that, but after that I will be going through the TPO chart. In a TPO chart I am looking at any sort of composite profiles and naked points of control. If we take a look at this range, you can see that these last 4 days were sitting there with the overlapping values. So if I merge them together, you will see that we have quite a nice composite volume profile. And if I will quickly take a look at a lower time frame chart, you can see that we rejected this level, and once we tried to broke below it, this was yesterday, then we came above it, retested it, and moved higher from there. So this was a relevant level on this move higher to this daily level. Besides that, you know, we tested these single prints today. These I'm not going to mark anymore because they are already filled. But above the market there is also another level of a kind of a bigger composite value, which, if you give me a few moments, we will have to wait and see how this actually looks like once it's merged together. What I don't like about this one is this kind of a hole in the profile. This is not the best one. This is not the best composite structure. You want to see your composite profiles looking like this with one nice distribution. You can see there is a clear hole, so I would actually not proceed to merge these, but if I only merge these last 3 before the value moved kind of a bit lower from there, this is your nice looking composite profile. So once again, you have the composite point of control, you have a composite value area high, which gonna come here, and you have your value area low that will be sitting around this level. You can see there is a 4-day, so you're gonna go to the modify text in Sierra, which will pop up this small window. You cannot really see because it's on a different screen, so give me a second, I will show you. I cannot move it for some weird reason. Okay, it's here, so you will just kind of change the text, but I'm not going to do that. You get the point, you know, it's a 3-day value area. So this is basically set for a marking of a key levels on a daily time frame and a profile. After that, we are going to go to the 30-minute time frame, and you know, depending on where you are going to, in which session you are going to be trading, you will have a plenty of information to work with. You can see that we hit that daily level, made a failed swing, you know, large buying volume into the level, we sold off from there, then we broke these lows, left a little bit of a cluster, moved lower, and now we are pushing higher what seems to be a kind of a simple SR flip. Not necessarily something I would trade, but you know, this is the context for the day. One last thing you want to be aware of is your prior day value area highs and lows, which for the template I gave you, they are already kind of set. This is different template I tend to use. Give me a second, this will also gonna take a little bit. Now it kind of whole thing lagged, so just be a little bit patient with that. Yeah, the whole thing is stuck now. I don't know, I think this is because I'm recording video. Oh, this is a different indicator, that's why this happened. This is highlighting the whole background for a value area, not something I'm actively actually using, but you know, we will just gonna stick through it for the video. Anyway, you can see that today when we hit this cluster here, market, Jesus, yeah, once again, I'm sorry for this is really annoying. I don't know, when I'm not recording these things, it works fine, but okay. And you can see that basically we went inside yesterday value area, hit the cluster, the 30-minute chart, and sold off from there. This is a decent trading opportunity. What I don't like about this is this compression above the price, but you know, sometimes you cannot be too picky. If anything, you might want to kind of put your stop a little higher, but you can see also we came into the level with the compression, so you have both kind of a weak spots on a both sides, and as market is going lower, it's, you know, this is definitely worth taking. As you can see, when we flushed lower, we almost hit the prior day POC, and you had this huge amount of selling inside this low, and market just bounced from there. So there is nothing too immediate for me, you know. If I miss this kind of optimal trading opportunity, I am not necessarily going to be chasing that, you know. I'm not going to be shorting again, and I just want to be basically waiting. But you will start to see kind of a different scenarios. If, for example, market would break above the prior value area high, you would, you know, make this sort of a V-shape reversal, break the structure, and you would have any level inside this to work with, you know. There is a possibility for a QM at the prior at the yesterday highs. You can clearly see that, so that there is once again a level to trade at. The thing with a intraday trading charts is that I very rarely just see a level like this, for example, and just blindly put the limit order there. The reason is that obviously for this type as this idea comes from a 30-minute chart, my invalidation would be above the high. This is too wide of a stop loss for intraday trade. What I want to see when I'm actively watching the markets is obviously market is going to come into this level, break a little bit above it, then lose the structure, form any kind of a microstructure pattern, or show some kind of sorts of absorption, and then I would go short. This is what I mean by kind of a active approach to the market. You don't just slap a limit order and hope for the best, but you rather just wait and trade these immediate price structures. But for this kind of pullback, it would be worth to setting your limits, because this is happening intraday, and even if you are unsure of setting your limits at this kind of a cluster, due to this fact of this compression, you can see that obviously market came here and you had this high large buying basically at the top, which is followed by no follow through basically. So you want to be chasing the short to the downside. But yeah, this is a brief overview of a intraday trading strategy. The process is very simple. You start on a daily chart, mark out your levels, see if you have any bias in terms of your candlestick biases. Then you want to go through the TPO chart, where you will mark out all the anomalies. So if you see any sort of poor highs, poor lows, single prints, naked points of controls, and so on and so forth. And then if you see a composite structures that are made from 3 and more days, you want to merge them together and mark out the composite values. After you've done all that, you will go to the 30-minute chart and look for your execution patterns, which failed swings, QMs, and clusters, and be aware of that. Be aware of overall move for a day, and once market hit the level of your interest, then you are going to the intraday time frame and look ideally for either the order flow signal, which this was that absorption at the high, or if if market would be, like I mentioned previously, there is, for example, this kind of a weak high here. So you are trading this overall QM on a 30-minute chart, but you are actively going through it. So you want to see, for example, these highs get taken. Either you will see the large amount of absorption at the high, which you can fade, kind of blindly, or you will see some sort of pattern where you will just play the continuation to the downside. So this is how I would go for trading the intraday charts. Like I said, this is a kind of a most complicated approach, because you will get a lot of kind of signals, and if you will chase every single 5-minute pattern or tick pattern, you can end up doing more better than good. But overall, stick to your higher time frames, trade around the daily TPO and 30-minute levels or 60-minute, whatever you end up using, and just use the lower time frames for the execution and for spotting up the order flow things. Okay, so let's take a look at another trading approach.